Have you ever stared at your bank account and thought, can I afford this? Maybe it's a new hire, a software upgrade, a bigger ad budget. And maybe you move forward with this decision only to regret it later when payroll was tight or a tax bill wiped out your extra cash. Here is the hard truth. Your bank balance is not your financial reality. If you're only making spending decisions off that one number, you are flying blind. I'm Bridget from Vector Financial, and I am not your typical accountant. I help small business owners with what your tax preparer didn't explain, what YouTube can't fix, and what AI will never understand, so you can finally have peace of mind, clarity, and financial confidence. So I had a client come to me in the past in a complete panic. They had hired a new marketing assistant because their bank account looked flush, looked very big after they had a great sales month. But 3 weeks later, they found that payroll was tight, bills were stacking up, and they were kicking themselves for rushing the decision. The problem here was not the hire. The problem was that they did not run these 5 QuickBooks checks first. Now, let me set the stage here. This client is not an advisory client of ours, so we were not aware of the hire ahead of time. But if we were, these were the 5 things that we would have told them to check before making that hire. First is your current cash flow. So your bank account acts as a snapshot, and cash flow is the full movie. So think of it as the trailer to the movie versus the full picture. You can run a cash flow forecast in QuickBooks or check your accounts receivable and accounts payable so you don't mistake borrowed time for profit. So let me break this down into like a kid version. Not because I think you're not intelligent enough, but I think this makes it relatable. I want you to imagine that you have a lemonade stand. You look in the jar and you have gotten $50 from your sales. Awesome, right? But wait, tomorrow you're gonna have to buy lemons, costing you $20, sugar costing you $10, and cups, which cost you $5. And one customer promised to pay you next week, not today. So you have money owed to you. That $50 that's in the jar, it's not really $50 to spend. This is why cash flow matters. It is going to show you what's actually yours to use and not just what's sitting in there for now. You have to be able to forecast what's coming in the future and see how much is yours to really use and keep. Check number 2 would be the burn rate. So if your new expense that you're looking to take on is going to push your monthly spend higher than the money you're bringing in, this is a red flag. Burn rate is what keeps you honest about sustainability inside your business. So let me give you a simple example here. I want you to think about this like a weekly allowance. Let's say you get $10 and you love candy bars. So you spend $2 a day on candy. By day 5, all of the money is gone and you still have 2 more days before you get your next allowance. So burn rate is how fast your money melts away in your business. So how quickly are you burning through the revenue that you're getting with the expenses that you must pay? Check number 3 is your revenue versus profit. $50,000 in sales does not equal $50,000 to spend. So if your profit margin is 20%, that's only $10,000 that you have to spend before taxes. QuickBooks, when set up good, can show you this instantly if your books are accurate. And I'm going to talk about those clean numbers here in a second. So let's make this simple again. Let's pretend that you sell cookies for $1 each. You sell 50 cookies, $50 in revenue. But those ingredients cost you $30. That means that your profit is $20. So revenue is how much you've brought in. Profit is how much you get to keep. And it's the profit that matters. When you ask, can I afford this? Now let's not get taxes on that profit, which is check number 4 here. You don't want to spend what's already the IRS's money. Reviewing your year-to-date profit to calculate your tax that you should be setting aside, and you should set that aside before committing to those big spending decisions. Let's break this down simply again. Some of you may laugh at this. I want you to think about your Halloween candy haul. This is perfect. I have 3 kids. I see this happen. You dump it all out on the floor and your older sibling says, hey, 25% of that is mine. Or they take all their favorite candy bars. You lose part of it, right? It doesn't matter how big that pile looked. Some of it is not yours to spend. So that's taxes. If you spend it before you set it aside, you're going to be scrambling later. And check number 5 is the alignment with goals. When you are thinking about spending or making a decision to invest in something, you should always ask yourself, will this get me closer to my revenue and profit goals? Will it save me time? Will it increase future income or reduce future cost? If not, it's probably not a now investment that you should be making. Let's make this one simple as well. I want you to imagine that you were saving up as a kid for a new bike. You've got $100 saved, but you see this cool video game for $50. If you buy that game, you are going to be farther away from getting that bike that you've been saving up for. And that's what business goals are like. Every dollar needs to move you closer to your dream, or it is just a distraction purpose. All of this is why we have created the Cash Confident framework inside of our business to help our clients move through what we call the 4C method. In order to make decisions around, should I make that hire? Can I afford this? Does this make sense? You've got to start with clean books. And that's number 1 inside this framework. You cannot have bad data making bad decisions. So if you're already using QuickBooks, this is where I would encourage you to have a health checkup. Your check engine light is probably on inside of there and you just don't know. Now we do have a free resource that you can grab below. It is our 9 costly QuickBooks mistakes. And I encourage you to go through that to see what mistakes are hidden in your books that are probably already costing you with decisions that you're making and probably costing you at tax time. Then we move into cash clarity so you can know what's really available. From there, when you know and you're confident, you can move into confident decisions. So you can say yes or no about that purchase or what you want to spend your money on without panic. And then it gives you full clarity for the future, which is the last part of our method, which really moves business owners into that cash confident CEO place. This allows you to invest in growth with full peace of mind. So yes, AI could probably spit out numbers, but it's never going to tell you with discernment, yes, you can afford this and it will move you forward. Or that's just distracting you from your long-term goals. This really is the power of clean books and real advisory. So here's what I want you to do next. If you are not using QuickBooks at all, I would love for you to take the readiness quiz to see if you're ready to invest in that software. I'm here to tell you if your business is making money, you really should have an accounting software on your side. If you're already using it, I encourage you to download the 9 costly mistakes guide that I mentioned below. I do not want to see you have simple errors that are sabotaging your business and your decisions and costing you at tax time. And if you are ready for clarity right now, let's get that health checkup on the books. We're experts. We see things within 30 seconds of being inside somebody's books. We can give you the game plan for cleaning up the foundation so you can move through this framework and make growth moves inside of your business with confidence. You work really hard to grow your business, and we want to make sure that your money is working just as hard for you. I would love for you to follow us. Tell us what that next big purchase is that you're looking to invest in. Are you looking to hire here in the future? And maybe you're scared about it. We'd love to have a chat. And I encourage you to also subscribe so that you can get more Real Talk financial tips that are going to give you clarity, confidence, cash flow, peace of mind, and really build this business that you dreamed of for your freedom. I will see you in our next video.